Hello Market Club members everywhere. Adam Hewison here, co-founder of Market Club with your daily update for the major markets. Well, the big news is earnings sink the markets and Spain gets another downgrade, but there's more. It seems like the world has just woken up from a fantasy dream that they're seeing the markets for the first time through reality glasses. According to comments made this morning from the head of the Bank of Israel, Stanley Fisher, the world is close to a recession. He just might be right. You know what I'm going to say next? Using our trade triangle technology, not knowing what the head of the Bank of Israel was going to say this morning, you'd have missed the current downdraft. In fact, you'd have been out of the market for the past couple of weeks on the sidelines. Taking a position on the sidelines is a position in and of itself. With a sidelines position, you are protecting your capital from uncertainty, which is clearly the concern of many investors today. You know, it's ironic. It was only yesterday that we indicated that the stock market was up 15% for the year. At the current rate of decline, we could be unchanged or even lower by the end of the year. Today's market action signifies there's still a great deal of uncertainty in the investors' minds about the economy, not just here, but globally. You know, we'll also be looking at Yahoo. Remember Yahoo? Well, it's a whole new game there with a new CEO, Marissa Mayer. But have things really changed? Well, we take a look at that. Now let's take a look at what's going on in the markets and see. So let's go first of all to our portfolio manager. And these are the markets we're going to be covering today. We'll start with the S&P 500. As you can see, it's a minus 70, indicating somewhat of a trending range, but more of a trend going down. And we've got a long-term chart on this going back to 2004. You can see we did not make new highs over these previous highs that were set in the 2007 period. So let's scope this into a closer view and put our 6 months would be good. And let's put our Japanese candlestick charts. Now, with Market Club, you have three opportunities on three chances, three opportunities to chart. There's the line chart, the candlestick chart, and also the Western style chart, which is very clean. It's sort of sometimes refreshing to look at that, so you can see how that has gone. Now, this is the recent low that we've seen, and you could also, from there, you can quite clearly draw a trend line, sort of goes through there, breaks through that line, and pushes the market down, so a little bit more momentum. Also, with our monthly trade triangles, the only one that's still positive. However, and this is what I was saying earlier in my comments, and that is the weekly trade triangle, boom, was out right here, and that was at 1430.53. The market's at 1413, quite a bit lower, but it told you weeks ago that the market was not good and expect a pullback. So again, if you're an intermediate term trader, which we recommend this strategy, use the long term for trend, so that we're still saying the trend is up from 1415, it's 1413 now, so it's about unchanged, but we want to use our weekly for timing. So let me just write that down so we get a clear picture. So what it is we are looking at, this is for trend, and this is for timing. So you would use this in a format for stocks and ETFs, even though that we know ETFs are stocks, but they would be the two markets you'd want to use this format. Really, the monthly for trend and the weekly for timing. You'd be amazed at how accurate they are. So let's go to our next market, and let's clear the screen and go to our next market. And the market we're going to be looking at is going to be the Dow. And the Dow basically, oops, take that back. Let me go back here and go back to my portfolio. For some reason, there's the Dow. So we're looking at the Dow, and much the same pattern there. You've broken through the trend line, which is this long-term trend line coming from this recent low here. And if you click here, you see a yellow box appears in the top left-hand corner. That tells you the trend line tool is live, so you can just draw that up here. And that's really the cause, I think, for the big decline, is breaking through the trend line. And remember, we've talked about trend lines. You need to have basically 3 points. And if you looked at my Traders Whiteboard series, you'll see that's one of the key things. I think it's the first Traders Whiteboard lesson 1. I think it's the most important tool you can have is this trend line tool. So breaking below the line is not a good sign for any market, regardless of whether it's the index here or a stock or a commodity or a Forex or whatever. it's not a good sign when you break below that support. So anyway, let's clear that screen off. So again, if we put our weekly trade triangles in, you'll see they came in right here. And that was at 13,367. Sorry, it's 13,116 now. So it's quite a bit lower, 220 points or 250 points at this point in time. So I think that's really worthwhile looking at. So let's clear the screen once again, go to our next market. That's going to be the Nasdaq. And all along, if you've been watching us, we've been saying that the Nasdaq really was kind of like the weak sister, and that's the case. The weekly kicked in here at 3,080, currently trading at 2,990, almost, well, not almost, it is 200 points lower, but you can see the market again with the trend line. It's a little bit different here. It's not quite so severe and sharp as the other ones, but you can certainly get an idea. Whoops. You can certainly get an idea with this trend line starting from here, moving up. And again, you have this 3 points touching right here in the breakdown. That was really the big thing. And that, of course, happened on Friday. So again, our weekly trade triangles were out of this market right here at 3,080. And it's currently trading at 2,990. So again, you would have been out on the way we suggest trading this with the long-term monthly for trend. We still say the trend is up longer term, but intermediate term trend down. So let's go to our next market. And that's crude oil. Now, crude oil has also taken a big hit here just the last few days. And this is what concerns me with the crude oil. I was concerned about obviously the market being in a very negative mode, but the weekly gain, this is the weekly. On crude oil, we tend to look at it as it being a commodity, and you want to use the daily and weekly. And it's great if you have the long term in your favor, but it's not so important. But let me just show you how that works. So you use the weekly for trend and the daily for timing. So let's just put those in. Now, it's obviously a lot more trading. So you only want to be short when the red arrow is pointing, or the red triangle is pointing down, in this case from this point here. So you can see there's a very nice entry point. But when you put the other triangles in, let's clear the screen and go look at those. When you put the other triangles in, the dailies, you can see it's a lot more activity. But you can see the last one came in right here. And that was on 91.12, and we're currently trading at 88.28. So almost 86.28, excuse me. So you can see it's almost 5 cents, $5 profit, which is $5,000 a contract. Tremendous move. But again, you trade both with the trend going up. So you just mouse over, you can see 91.12 on the 19th, which is just a few days ago. And you can see this rapid move down. And you can see that the move here, you were shorted here, 91.65. You were out at 92. That would have been a loss of 50 points. Again, it's not perfect, but it does put the odds in your favor. So let's go on to our next market. And the one thing with crude oil, one more thing I want to share with you with the crude oil, and that is this. This was really, I think, some sort of a support level, and we've really broken below there. So you could look at this theoretically and certainly technically. You could say that this area here is kind of like a top, and the 98 right there, 98 level, to the 88, which is 10. You could say it could go down to 78 to $80 a barrel. And certainly if we are going to go into recessionary times, the demand for crude oil will be, it's supply and demand. So the demand will be less and prices have to come down to meet that. But the other wild card, we've talked about this before, is obviously the Middle East and what's going to go there. So that's something we don't know. But generally speaking, if you didn't know the news, if you're just on a desert island, we've talked about desert island trading before, you would basically want to be short this market right now. So let's just clear the screen and go to our next market. And that's going to be the USO. We'll pass that because it's pretty much the same as the crude oil. Now this is the euro. This is interesting because, again, with the euro you have The way to trade this market, of course, we don't use the dailies. You can use the dailies, but we tend to use the weeklies more for trend and the monthlies. That's longer term. If you're an intermediate term trader, use the weeklies. If you're a very short term trader, you could interplay that with the dailies. So if you put the dailies in here, just to give you an example, you would have been a buyer here, let's say, because the monthly went up. You'd out here, and let's just put those numbers in here. So you'd be in at 127.47, out at 130.28, back in at 129.57, out at 129.33, small loss. You back in at 129.89 and then out at 130.15 for small profit. You'd actually, right now, you'd be out of the market completely, waiting for the red weekly trade triangle to kick in. So let's, the other concern I have here, just putting on a simple chart like this, is potentially, this could be a twin peaks. We've talked about this in our lesson, I think lesson 2 or lesson 3 on our trades whiteboard. So there's the one peak, there's the other peak, and this is a double valley, meaning if it goes below the 128, we've talked about the 128 level as the line in the sand. If we go below 128, we're going to go significantly lower. And of course, over 131, we'd be looking at a 135 target zone. So right now, we're sort of in an uptrend, plus 85, so you have to respect that. But we want to watch this market very carefully because I think there'll be some great opportunities in this market for the rest of the year. So let's just clear that screen off and go to our next market. The next market is going to be gold. Gold has had a pretty big pullback from where we were. And as you can see today, it's not doing very, very well. And where we stop on this pullback is going to be pretty interesting. So let's just put a line chart in, try to make it simpler to look at, take all of our trade triangles off, and just look at a simple line chart. Well, I think we could say that the recent low was here before the market really took off, or we could say here. So let's go to the lowest of those lows, and we'll pull that down to right, let's say right here. I think that's reasonable to say. So certainly we could be looking at the 1700 level, which would be a big psychological level, 1678, which is a 50% retracement, and 1651, which is a 61.8% retracement. I somehow don't think it's going to get there, but the trend is your friend. But you can move this up to here, and then obviously things do change dramatically in terms of the pullback. But generally speaking, it seems that the momentum, at least for the time being, is on the downside, and we want to wait to see really where this lends itself. Again, we use on gold, we use the weekly for short-term time. It's a commodity, remember. Unless you're a long-term trader, you want to use the weekly and the daily. So the daily is basically, we'll put the daily in here. The daily kicked in right here. The weekly kicked in again here at 1738. So you should be short gold of anything right now. If that's against your grain, you want to keep all these trade triangles aligned. You may just want to be out of the market for the time being. So let's go to our next market, and that's copper. Copper has come back right to the, I think it traded down to, if I get my candlestick charts there, traded right down to the 355 level, which that was the original breakout point. If you remember, we talked about this yesterday, and we're very oversold. So I would expect that we're getting close to a low here. It hasn't turned around for sure, but we may see just a little bit more trading like this before we go anywhere. But this is a very strong last few days in this market, so it deserves to be looked at. And this is a excuse me, this is again a commodity, so you want to be looking at the weekly and the daily for trading. So let's clear that screen and go to our next market, and that's going to be, oh, hang on one second, I'm going to clear the screen off. There you go. So the next market's going to be silver, and silver looks like a little bit silver looks a little bit different from gold. It's had the pullback. We're very oversold. The weekly and the daily are down, so it's still negative. But I would say if we go over this day here, I think the price there was 32.50. It's a 32.47 exactly. But if you go over 32.50, I think that will thwart the downward momentum and would certainly be a cover position for your position right here that you took. So that's, again, that's the key there, is if we go below this level here, from 33.35 right there, if we go over the 32.50 level, you'd want to take that out for a quick profit. So again, that's the silver market. And there again, we can look at this market and look at the Fibonacci retracement. Let's go back, a very simple line chart. Let's take all of our tools off there, our trade triangles, and put that line in. So it's pretty clear on this market where the lows are. So where we've had a 38% retracement, 50 takes it down to 30.96, and then to 30, which we talked about earlier. So let's see how this market plays out. But again, a lot of liquidation in these markets. People just want to have money in their pockets and not in the markets right now. So let's take a look at our next market. That's going to be Yahoo. Yahoo has a new CEO, and you're looking at this market, wow, it looks pretty good there. So let's put our monthlies in, and you can see we had a monthly buy here, and that changed the trend in our opinion. That was from 16.37, it's currently trading at 16.67, but is it really worthwhile buying? So what we did with this market is pretty simple. We just took a maximum amount of data we have and take these off. And you can see, really, I'll scope this in just a little bit. Let's forget about the Yahoo at 40, which declined to be purchased, which was a big, big mistake. But as we go closer, and you can see, let's just go back a little bit. You can see we're really stuck in this trading range, and I think it's going to be very, very difficult for anyone, including Marissa, to get out of the trading range. And here's the trading range as I see it. Certainly, you look at this level right here. So I would say over 20, a close over 20 would be positive. I would say I would rather be a buyer of this market if it closed over 20. But right now, we're sort of stuck in this. We may go up to 20, but on the downside, you're sort of stuck in this range here. I would say 14 to 15 on the downside. So good earnings yesterday, surprise earnings. New CEO, the fifth one we've had is at Yahoo. Whether she can make a difference remains to be seen. What happens on the internet is what I call the cool factor. And at one time, Yahoo, or the Yahooligans used to be very cool. And now it's lost that cool factor. And it looks as though Google could be losing the cool factor. So again, it's a moving target all the time on the internet, and that's the big challenge you have as a trader and an investor. So looking at this market, you have to say, and I'll clear everything off the screen, we're going to put our trade triangles on here. You'll get an idea of what we're saying. So all of our trade triangles are green, indicating a strong upward trend. And if you want to trade if you want to trade Yahoo, that's the way we would trade it. But hey, this is Adam Hewison for Market Club. Thanks for stopping by. Every success in the markets. And if you haven't downloaded my latest ebook, please do so. It's free and it's yours for the asking. So just go to our blog. You'll see a posting there for the ebook and just download it. You take care. I'll see you tomorrow.